Okay, let's unpack this because, well, there's this whisper that's definitely turning into more of a roar in the financial world. It's predicting a huge wealth transfer, maybe unlike anything we've seen in, generations. So today, we're diving deep into the insights of Michael Oliver. He's a market analyst, pretty renowned for his unique momentum-based approach.
Right, and that momentum focus is key. He's not just looking at price charts like everyone else. It's about the speed and the strength behind the price moves. He believes that tells you much more about the real underlying shifts happening.
Exactly. And he sees, well, basically a perfect storm brewing. So this deep dive, we're pulling from various YouTube interviews he's done. He's discussing market patterns, precious metals. It's quite compelling.
It really is.
Our mission, really, for you listening, is to explore his, frankly, stark warnings about the stock market and his thoughts on a potential Bitcoin collapse, which is pretty dramatic. And then his really explosive predictions for silver and what all this might mean, for your own finances.
What's fascinating, I think, is how he connects these different signals, things that seem separate, but he sees them converging to paint this picture of, systemic change. It's not just a market correction in his view. He's really looking past the daily noise, trying to spot these deep patterns, the monetary reality underneath it all. He's arguing for a fundamental rethink of what real value even is.
Okay, so here's where it gets really interesting and maybe a bit unsettling. Michael Oliver is sounding the alarm about a chart pattern you might not have heard much about. It's called the broadening top. Apparently it has a pretty brutal track record.
Yeah, imagine a megaphone shape on a stock chart. It gets wider and wider, higher highs, but also lower lows. It basically screams instability. The market's lost its direction.
But this isn't some new discovery, right? You mentioned Edwards and McGee.
Right. From their textbook back in 1958, Technical Analysis of Stock Market Trends, they described this exact formation, appearing just before really violent reversals. It lulls people into thinking things are okay, just getting more volatile right before the bottom drops out.
And Oliver sees this now as the most dangerous setup in decades. That's a strong statement.
It is, and the insight isn't just the shape on the chart. It's what it says about market psychology. Extreme volatility, but people get complacent. They think it's just noise, and that's right when the potential shock happens. It's a lesson in watching out for that complacency.
That pattern sounds genuinely unnerving. But, if it was described back in the 50s, why does Oliver think this time is uniquely dangerous? What's different now?
Well, if you connect it to the bigger picture, his momentum work is flashing warning signs before you'd see them on a simple price chart. He argues money is already sort of quietly leaving the stock market. There's this growing doubt. And he's saying this won't be a gentle slide. When that pattern breaks, he uses the word detonates.
Detonates. Wow.
Yeah. A chain reaction, plunging stocks, risk assets bleeding out, liquidity just vanishing fast. He points out that market leadership is already pretty much gone. It's super narrow. Just a few big names like Microsoft, NVIDIA, making tiny new highs. And even they are looking weak, getting dumped on, as he puts it. That recent breakout everyone cheered, he called it a trap. Totally unsustainable in his view.
Okay, so if the stock market's foundation looks that shaky, a lot of people naturally think, okay, Bitcoin. Digital gold, the safe haven.
Right.
But is it? What's Oliver's take here? Because many see it as the ultimate protection against, fiat currency losing value.
Right. The whole digital gold narrative protects you from inflation, money printing. But Oliver has a very different perspective. He flat out calls it a speculative bubble.
Okay.
He thinks it's thrived on stories, decentralization, scarcity. But fundamentally, it's tied to the risk-on world, meaning it does well when investors feel confident, when they're happy to speculate.
And he shows this how?
He overlays Bitcoin's monthly chart with the NASDAQ Q100. And they move almost identically. Like twins, he says. So in his view, it's not an alternative to stocks. It is part of that speculative bubble, moving right alongside the big tech index.
Wow. So not a safe haven, but actually part of the potential problem if that broadening top detonates.
Exactly. And he gets quite specific with his warnings. He predicts Bitcoin could be cut by more than half. And quickly. Especially if it breaks certain momentum levels he's watching, somewhere around that $90,000 to $105,000 range.
Those are some very specific numbers and a very dramatic prediction. What gives him that conviction? Is it purely the momentum readings?
It seems to be a combination of the price structure and his momentum analysis. He calls Bitcoin's current setup a lethal structure. He even compares it to the S&P 500 right before the '87 crash, saying it's basically built and ready to trigger.
So why isn't it a refuge then, if everything else is falling apart?
Because, according to Oliver, when that equity pattern blows up, Bitcoin becomes collateral damage, not a lifeboat. Think about it. Unlike gold or silver, you've got massive volatility, tech that's still evolving, regulatory uncertainty hanging over it, vulnerability to hacks, blackouts. It just doesn't have that centuries-old tangible history of precious metals. It thrives when there's lots of easy money and low fear. And Oliver thinks both of those are about to disappear.
He calls it a financial and psychological ambush. That really paints a picture.
Yeah, especially for investors and even major companies that have piled into crypto recently.
Yeah.
Big headline risks there.
Okay, but here's the twist, right? Oliver doesn't think all this capital just vanishes. When Bitcoin implodes, when stocks reckon with this pattern, where does the money go?
Exactly. It moves. And he says it's moving and will move faster into physical, hard, real assets, specifically silver.
Silver. Okay, and we are seeing some movement there already, aren't we?
Definitely. It's been trading, above $38, $40 an ounce? That's nearly a 30% gain year over year, testing highs we haven't seen in years.
And Oliver sees this as just the start. He talks about silver having lagged, right?
Yeah, significantly. He points out copper is way above its 2011 high. Gold is miles above its 2011 high. Even the gold mining stocks, like the XAU or GDX indexes, they've broken past their 2011 peaks. But silver hasn't yet. He believes the relative performance, that spread between gold and silver, is now screaming that silver's turn is here. An explosive catch-up is coming.
And his price targets are pretty eye-watering.
They are. He thinks current levels are just the warm-up. He's talking past $60 by the end of the year, and then continuing up towards $200 an ounce eventually.
$200 silver.
Wow.
Okay, but how does he justify that kind of move? The previous all-time high was around $50, wasn't it?
But that's a key part of his argument.
Yeah.
He calls those old $50 highs phantom, or even silly in today's terms.
Phantom.
Because of monetary degradation. Think about how much the value of the dollar itself has eroded since then. He says money supply, just as a rough measure, increases about 90% every decade. So adjust that $50 for inflation and money printing. And he argues silver probably should be $100, $200 right now, just to match that old peak in real terms.
So it's been massively undervalued on an inflation-adjusted basis.
Hugely undervalued in his view. And once it definitively breaks that psychological $50 level, he expects a gush of buying, taking it to at least $60 or $70 pretty quickly. It's not just a rally. It's like a fundamental repricing. The market finally waking up.
Okay, so why silver specifically, and why now? You mentioned a perfect storm.
Exactly. Vanishing supply hitting relentless, surging demand. It's a classic squeeze setup, but on a massive scale.
Let's break that down. Supply side first. What's happening there?
It's a ticking time bomb, really. The market's facing a deep structural deficit. It's been going on for years, maybe 5 years deep now, and it's accelerating. Projections for 2025 suggest a gap of potentially over 200 million ounces. That's huge.
And we can't just mine more.
Well, that's the critical point. Over 70% of silver isn't mined directly. It comes as a byproduct when you mine for lead, zinc, copper. So even if silver prices shoot up, you can't just easily ramp up silver production on its own. It depends on the economics of those other metals.
I didn't realize that.
Yeah, it's crucial. Plus, you've got falling ore grades, project delays, governments making permitting harder. New mines take years, decades sometimes. And then look at the inventories. COMEX, the big U.S. exchange. Their registered silver inventories have collapsed, down something like 70% since 2020. Oliver calls it crisis level, a powder keg just waiting. He thinks it's ready to go vertical.
Okay, wow. That's the supply side. What about demand?
Unstoppable force. Think about the technology supercycle. It's not hype, it's reality. Solar panels, EVs, 5G networks, AI data centers, semiconductors, robotics, even advanced medical tech.
They all need silver.
They all run on silver. It's not fringe stuff. It's the future of the global economy. Industrial demand is already, nearly 60% of all silver use. And it's growing fast. The solar sector alone is just gobbling it up. Maybe 232 million ounces last year.
And is there a substitute? Can't they just use something else if silver gets too expensive?
For many key applications, especially high-performance solar cells, not really. There's no metal that matches silver's conductivity, efficiency, and reliability in that context. And interestingly, the amount of silver needed per solar panel is actually increasing for better efficiency, not decreasing.
And China plays a big role here too, right?
Huge. They produce something like 80% of the world's solar panels, so they're accelerating that silver consumption at a pace the market just struggles to keep up with.
So you put that supply crunch together with this massive non-negotiable industrial demand.
And its historical role as money. It's systemic, not just cyclical. Oliver sees this powerful, fundamental force building that he believes will just detonate the silver price, kind of independent of whatever chaos is happening in the broader financial markets. He even suggests central banks and sovereign funds are already quietly accumulating it as a strategic metal.
Yeah, this feels like it's about more than just market mechanics, doesn't it?
Yeah.
Oliver seems to be suggesting this is a fundamentally different kind of shift, driven by bigger global forces.
Absolutely. He talks a lot about monetary degradation. Basically, for the last 100 years or so, governments have just relentlessly pushed the pedal on money creation, using it as a tool, he says, for survival, constantly increasing the money supply. M2 is one measure he watches, and that just erodes the real purchasing power of our currencies over time.
Yeah, his examples really hit home. Like the cost of a loaf of bread or a house compared to decades ago. It's not just numbers on a screen. It affects everyone.
Right. And then he connects that back to what he calls the biggest stock bubble in U.S. history. You know, the NASDAQ up 20 times, S&P up 10 times since the 2009 lows. He warns that when that bubble finally pops, the consequences won't just be on Wall Street. It'll be real-world, in-the-street consequences, more painful and widespread than 2008.
So it's different this time then. Why can't the central banks just step in again, print more money, cut rates, buy assets? You know, usual playbook.
That's the core of his argument. He suspects this time might be different, that the crisis could be not just print-awayable, that the usual fixes won't work, leading to a real loss of faith, real doubt in the core institutions themselves.
Like the Federal Reserve.
Exactly. We're already seeing declining trust in fiat currencies, in central banks, academics, even politicians. He mentions Trump. Vance are openly questioning the Fed's role, its practices. He makes this really provocative prediction, saying we might not even have a Federal Reserve in a year or so.
Whoa, that's bold. What drives that view? Just public anger? Or something more structural?
He points to the mounting economic pain people will feel, combined with a realization that these recurring boom-bust cycles engineered by the Fed just aren't working for most people.
Yeah.
Plus, look globally. The de-dollarization trend? BRICS nations actively looking for alternatives. Central banks loading up on gold at record rates. Russia, China developing gold-backed settlement systems. He says these are strategic moves, not symbolic. Preparing for a world where the dollar isn't king anymore.
And meanwhile, U.S. government bonds, the traditional safe haven.
T-bonds. He describes them as anemic, sick. They aren't acting like the safe alternative to stocks this time around, which leaves what? Monetary metals? Gold and silver? He sees them as the one real alternative standing.
Right. And while silver has maybe the most explosive upside potential in his view, gold is still crucial in this story.
Absolutely. Gold's already hitting record highs, well past $3,300. It's leading the way in some respects. And Oliver's long-term targets for gold are also pretty staggering. Potentially $10,000, maybe even $20,000 an ounce down the line. He points to previous big moves like 8-fold increases since the U.S. government made it legal to own again back in the 70s.
And it's not just precious metals getting attention, is it? What about other commodities?
He mentions crude oil looking technically set for a major breakout surge, and the broader Bloomberg Commodity Index showing a similar setup. That's going to be a major upset factor, he thinks. Pain at the pump, more inflation fears, adding to the emotional pressure on everyone.
So pulling it all together, Oliver's describing what sounds like a fundamental regime change.
That's a good way to put it. A shift away from eroding paper wealth towards physical certainty. Gold and silver become the insurance policy for this next era. They have thousands of years of history as real money, tangible value. They offer privacy, real ownership, in a world where digital systems feel increasingly fragile and trust in centralized authorities is, well, crumbling. He thinks investors are finally waking up, realizing that when the dust settles, preservation of capital might be more important than chasing the next innovation bubble. It's a profound shift in thinking.
So whether you're looking at Michael Oliver's warnings about, that precarious broadening top in stocks or the vulnerability he sees in Bitcoin, or maybe focusing on that explosive potential in physical silver, driven by those supply and demand fundamentals, his analysis definitely paints a vivid picture of some dramatic financial shifts, potentially right around the corner. It really makes you think, doesn't it? As confidence in the old system seems to be fraying and capital starts searching for tangible finite value, how do you navigate this landscape? Where do you position yourself, your capital, for whatever comes next?
And this isn't just about trying to time the market perfectly or chase quick profits. It feels deeper than that. It's about understanding this potential fundamental revaluation of what we consider real money, real assets, especially in a world that feels increasingly uncertain, where maybe the old rules just don't apply anymore. And silver, with that unique mix of industrial demand and monetary history, it really seems positioned for a breakout that could redefine its value, its role. It certainly urges you to think about what truly holds value when things get turbulent.